And then, yeah, so I go on to this every week. Now, I am now back in full swing trading. I know some of you are thinking, yeah, it took your time. Yes, but it's been an interesting year. Usually start trading at the middle to end of January for the year, maybe end of January this year. February was busy. I had some stuff to do with my church. And then I had to took a family holiday for the first time in February. We usually don't do that in February. And so my wife made it very clear that she would either kill me and or destroy any devices she saw me using during the holiday that had work on them. And that's not really true. I'm just exaggerating. But I wanted to just give my family the time. And so came back, and then, this thing called the coronavirus hit. So I didn't really start trading till about March. And then even then, in March, I was kind of part-time trading, because I had so much of the stuff going on. Of course, many of you know that I lead a church. And so when the COVID virus hit, the first 2 weeks of that, my brain was just taken up trying to reorganize our entire system, both for our church and my other businesses to be COVID proof. Last week was my first real week back trading. And so I'm bringing you now into my modus operandi as how I usually approach the market when I'm full swing. Also, I mentioned to those of you who were on the beginners and the beginners webinar. We call it the beginners webinar, but in case there's any advanced people who watch the recording, because I've noticed most of the most of the experienced traders don't attend the beginners webinar. I think there's a little bit of a snobbish thing going on. We call it beginners simply because we're dealing with stuff that is foundational, that I want all new people to understand so that they don't form bad habits. But we do drop some gems there. And even if you've been trading for longer than I have, and I've been trading about 13 years now, I can guarantee you that unless you learned to trade the perfect way, which very few of us did, you've got plenty of bad habits that are costing you money. And so you want to jump on those beginners webinars because we're dealing with the foundational building blocks, putting things in place. You will find, I can guarantee you will find something in one of those webinars that will save you money literally in the next trade you take after you watch the webinar or come in for it live. And that's including your winning trades. So even winning trades, we lose money when we win because we enter too late, we enter too quickly. Whatever it is, you can win a trade and still not come out with as much money of it as you should have. And of course, when you lose, you lose. So we've done 2 of those so far. The plan for me is to do at least 1 a week. For us to do at least 1 a week, maybe 2, we'll see, but at least 1 a week moving forwards. Also, I am going to trial in the future doing some of these webinars live on YouTube. So Zoom, you still, for those of you who are in the academy, you can still log in via Zoom so we can interact that way. But actually, no, we can actually interact on YouTube as well. I want to see what it looks like on YouTube, how it feels to go live on YouTube. One of the reasons why I would like to do that is the quality of recording is actually a lot cleaner on YouTube. But then secondly, YouTube has some cool features where the fact that we're live would, draw some attention to the channel. And I want to see how that works. So I told you guys at the last 2 beginners webinars that I have opened a micro account for $100 because the one thing I hear from all new traders, all traders who aren't doing as well as they would like to do is, you can only do well with a big account. That is baloney. It's a baloney sandwich, and it's full of ham and cheese. I have personally done this $100 to $1,000 before. I know people who've done it before. You can start big, start small, and grow big. But I wanted to show it to you. I wanted to say, okay, so for instance, many of you see me put the result of my bigger accounts. Like last year when I was trading the fund account for that started off at roughly by the time you guys came on, it was about 100 grand. And then I think I grew it to about, because you guys came on for my last 2, I think I started showing that for my last 2 months of trading that account. I think I went from about 100 to 130, 140, something like that, before I stopped trading that fund. And then I've been showing you with either my demos or with my my for those of you who've seen it, my slightly larger live account. And even that is, a few grand. So you can't relate with that for some of you. So I thought to open a demo account for $100, and then nobody would let me open a demo account for $100 because most of the people who provide demos don't think anybody wants to trade with $100 in demos. So I thought, you know what? Let me just open a live account for $100. So I put my own money in there, and there you see it. Now I've since deposited another $50 in it because I found out that I had an extra $50 that my broker had for months that they had stolen. Because they archived an account I withdrew money from, and I don't know why I withdrew, and I left $50 in the account. I did that because I thought it would keep the account alive. So when I came back to it, I could carry on trading with it. But they still shut the account down and swallowed my $50. So I went through my system, and I thought, hold on a second, there's $50 missing, and I found it. So I thought rather than withdraw the $50, I would just add it to the account. So if you see this, if you can see my screen, on the 8th of April, I deposited $100. I've taken 2 trades on the account, a win and a loss. I explained this to you guys last time. The loss was actually an accident. I was trading at 4 a.m. server time, so that's 2 a.m. 2:45 a.m. in the morning. I was sleepy. I was groggy. I thought I was on my throwaway demo. I'll explain that in a second. I didn't realize that I left this new live account on this. If you see, I have 4 different MetaTraders. If you look at here, these are 4. I'm moving my cursor. These are 4 different MetaTrader platforms on my system. Each of them is for a different account. There's 2 live and 2 demo. And so I forgot which account I was on, put the trade on, woke up in the morning, said, snap, I'm trading against my daily bias. I never trade against my daily bias on a live account. I only do that on demo to test some things. So I closed it exactly at 1%, showing good risk management. I then took the right trade that day for the right bias, and I made 7%, just over 7%. Again, 7% of $100 is $7, but it adds up. And so I just thought, you know what, rather than withdraw the $50, this should be fun. I'll just stick it in this account. And so it's now a $155 account, which means that I can take slightly bigger wins and losses, because on this account, I want to stick to my rule with you. 1% risk, and at the very most 2% max, because I know what I'm doing. I'm an experienced trader, 13 years worth of experience, maybe 6 years worth of correct experience. The first 7 years were, doing the wrong stuff, which I'm teaching you not to do now. And so I just put that in there. And that's what this is. So if you see this, you know that this is a live account. You can look up here. If you look at this here, that says live. So this is real money. And if you know me, you know me very well. You know both my mother and my PA and someone who works with me on a daily basis in some of my other enterprises on my media stuff. So the 3 people on this webinar right now who see me or talk to me very, very often, they know that even when I become a billionaire, I'll still be looking for a £5 note under the seat of my car. I just do not like to lose money. I'm very, very picky, and not just money, stuff in general. I'm very particular about my stuff. I've got shoes and clothes that I've had for 15 years and still look almost brand spanking new. And so the fact that it is a $150 account, if you know me well, you will know that I will still treat it with a certain degree of, because I don't like to lose money because it's live. And yes, Jamie's laughing. You know what I'm like, Jamie, right? If we lose a cable, we will search the whole building till we find that cable because it costs money. So with that being said, I'm going to open a brand new chart because this has some of my analysis. Actually, should we start by looking at last week? Because I usually, when I do a live analysis, I start by looking at the last week in price. So I'm going to look at that real quick, but I'm going to start with a brand new chart because this already has some of my markings from what I would. So this was how I marked up my charts last week. And if you take a look at this, I took 2 trades last week. I believe it was 2. Yeah. No. I think I took just one trade last week because I was busy. This is the trade here. So I'm only going to be dealing with trades I take on my live account. I'm not going to show you trades I take on my demo unless I want to teach a principle, because some of them are just experimental. So I'm going to show you the live ones. Or yes, I forgot to mention this. So I have 4 accounts, 2 live, 2 demos. There's a bigger demo and a smaller. So there's a bigger live and a smaller live. The smaller live, I usually used to have only one live. I started the second live because of the reasons I just gave. So that's a $100 live. My demo, and then I have the bigger live, which is the one I really trying to make my money off. This is just to teach, because I'm not $7 isn't going to change my life till I grow it. I've got two demos. One I treat pretty much like a live account. So I'm still a little bit riskier on it, but I don't just take wild trades on that. This is when I think, okay, something has a really good chance of working out, but I'm not ready to risk my money on it. So I'll take it there. And I have what I call a throwaway demo. I will lose 5, 6, 7 trades on that because I'm trying to see something, what's going to happen here. Or sometimes I will model bad behavior on it, like I did in the last webinar, to show you this is what happens when you over leverage. This is what happens when you just jump from one trade to another. This is what happens when you try and take too many trades at the same time. So that particular account, demo account, is I call my throwaway demo. It's for me to do stuff that I would never do on a live account. So this is a live. This is a trade. I explained this in the beginner's webinar. I'm not going to repeat it. Please go back and watch it, even if you're an experienced trader. But I risked, well, actually, I started off down here, but I moved. So my stop loss was initially at this level here. Let me put this in. My stop loss was at this level here. This black level here was where my stop loss was. But then I moved it. Once this low formed and kicked off, I moved it here. And actually, you know what? I am not going to repeat last week's analysis because I did that on the beginners webinar a few days ago. So watch the beginners webinar from Saturday. I analyzed this trade as part of my teaching about not forming bad habits and what good habits look like. So let's jump over to this account here. So this is one of my demos. Let's see, which demo is this now? This is my, let's see. Yeah, this is my bad habits demo. So this is the demo I use to mess around with. So yeah, so this is a good one for us to analyze with. I'm going to open a brand new chart. So what would you do this week if you were just starting from scratch? And if you're a beginner trader, again, a lot of this will be flying over your head, but sit through it. Like I explained, a child is born not understanding English or whatever language you speak in your household. But part of the teaching process is teaching the child intentionally. But part of it is just the child listening to the language being spoken. The more you listen to a language being spoken, the better you get at speaking said language. So even when things don't make sense, that's why I'm putting you beginner traders in all these things, these forums. I want you to hear the language being spoken on a regular basis. And therefore, when you start being taught it particularly, you will also, some things will just pick up naturally. So this is how I start. This is my cadence. There's something called the dollar index. Okay, that's there. That's an already existing one. But let me start with a brand new one. I'm going to open the dollar index. Now, I expect you, if you are, especially if you're not an experienced trader in the IKW, to only be trading majors. As you get more experience, feel free to go ahead. I personally will not be doing much analysis on the cross pairs because I hardly ever trade them. Now, the majors are the pairs that have the dollar in them, for those of you who are new. So that would be your Euro USD, GB USD, NZ USD, JPY USD, what am I missing now? US, UCH, what's the Swissy now again? My brain's a bit tired today. CHF USD. There's 7 currency pairs against the dollar. almost 90, 80 something percent of all foreign transactions go through one of those 7 pairs. So you have plenty of, you will always find a trade on the majors. The minors or the crosses, I don't like them because the minors are the other currencies against the dollar, and then the crosses are the currencies against themselves. The reasons why I don't like them is 1, the spreads are high. 2, they behave slightly strangely. And 3, they are controlled using the majors anyway. Because the worldwide foreign exchange market passes through the dollar as the exchange intermediary. So every currency calculates itself against another currency by using what the two currencies calculate themselves against the dollar as. Let me repeat. To go from the euro to the British pound in value, you have to first calculate what the euro is against the dollar, then calculate what the pound is against the dollar, and then cross it. That's why they're called crosses. So it doesn't make sense, in my opinion, if you can find a trade in the majors, it doesn't make sense to be trying to find trades in the crosses or the minors. So because we are using the US dollar, there is something called the dollar index. And now this is the first ever live analysis session in this new format. So I'm assuming that those of you watching it, some of you haven't watched me analyze live before. That's why I'm breaking all this down. If you have before, just bear with me for about 5 minutes. We'll get to the real stuff soon. So this is my template that I use to trade. A template is a group of chart patterns or chart properties. So I like my backgrounds white, black and white, and I have some indicators already slapped on the chart. I will give them to you. I'll give out a free indicator after every session so that only those who attended the session get it. And if you miss that session, you don't get it unless you come back for another session, which I give it out again. This is one of the ways I'm going to keep you guys honest. And so these lines here, they show certain times of the day. The orange line shows the Asia session. The blue line shows the period of time just before the Asia session, which I'm not going to explain what it is. I'll just give it to you outright. It's a central bank dealer's range. I got that from a mentor of mine called Michael Huddleston, but that may not make sense to you. But I use them as reference points for my day, because I'm primarily a day trader, maybe sometimes an intra-week trader. And so I come here and I go top down. So I walk my way down. Now, I am technically, as a day trader or an intra-week trader, I'm technically trading the 4-hour chart. So technically, if you put a gun to my head, this is the chart I'm trading. But as I've taught you guys before, when you trade a chart, you need to have at least two levels above and 2 levels beneath to work with. The levels above are for reference points and for your biases. The levels beneath are for your levels, your entries, and your management. So if I'm trading the 4-hour chart, I need to look at the daily and the weekly. I also need to look at the 1 hour. Technically, it should be the 30-minute, but the 30-minute isn't really a very good chart in that it's very similar to the 1 hour. So I always skip the 30-minute and I go down to 15. Now, I usually don't look at the monthly because most of the information the monthly will show me, I can already see on the weekly, and the levels are more refined. However, if I was using the daily as my main chart, I would go up to the monthly definitely. So I will be doing, quote unquote, my scenarios, and I explained this in the past that this is how I trade. I first of all look for a scenario, meaning an idea of what I think is going to happen based on what the price is showing me. I then wait for a signal. The signal is something that happens that tells me, bang, your scenario is correct. I then look for an entry pattern. And entry patterns or entries are personal. Everybody will have your preferred entry as to become a better trader. Something that works for you, something you can see, something that you just know when you look at a chart, it's obvious to you. It works with your personality, it works with your spatial awareness. We can have the same scenario and the same signal on 2 different entries, and both will be fine. And then we then have the management of the trade. So what do we do with it? Where do we close it? Where do we put our stop loss? Where do we put our take profit? Where do we move our stop loss to 0? Where do we take off half of the trade to bank some money in case the trade goes against us? That's all part of the management. So my scenarios are going to be framed off the 2 higher time frames and my reference time frame. My signals are going to be framed off my reference time frame and the time frame lower. And then my entry will always be framed on the lowest of the time frames I'm working with. So that's 2 time frames down. skipping the 30 minutes, because the 30 minutes and the 1 hour are essentially the same. They behave almost identical. So there's no point using both of them. So now I'm jumping to technicals. Now, if you're a new trader, the technicals don't make sense. Just stick with me. They'll make sense after 2 or 3 sessions. I'm going to assume you know some things. I've taught the experienced guys. The first thing I'm doing is I'm framing what's the range I'm working with. So the highest and the lowest point on my chart, actually, sorry, that should be on a weekly chart. So what's the range I'm working with? The highest and the lowest on my chart. I'm going to take the dividers out. With the dividers, each divider on a weekly chart is a daily, or is a yearly period. So when I put this here, from here to here is 1 year. On a month, it's the same. That's 1 year. On a day, that's 1 month. Each divider is a month on a day. On a 4 hour, each divider is a week. And on an hour all the way down, each divider is a day. And that is very important, because when I'm framing stuff, remember I told you that my 4 hour is my reference point. Since one divider on the 4 hour is a weekly candle, I start from the weekly, because if I can plot what's happening on the weekly, it gives me an idea of what's going to happen during that week on a 4 hour chart. The same thing with a day and a 1 hour. If I have an idea what a day is going to do, I can come down to any of these lower time frames and basically plan how it's going to work out. So let's start from the weekly. That is the range there. Right? That's on the chart right now, that's the highest point to the lowest point on the weekly time frame. Why is that important? You'll see in a second. Because we're working with ranges here. So that's the highest. Now, because I don't want that funny color on my screen as I drop down, I am just going to throw a line there and a line here. But I just need to look at that. So the reason why it's in color on the weekly is I want you to see what price has done. It started off here, came all the way down there. It went up, stalled there. Went up, came back down here, went up there. This whole spike here is COVID-19 issues. This is why this is so funny. It looks so funny because the markets have been gyrating because of what's going on with the COVID-19 pandemic and the stock market. So we teach that fundamentals make price move quicker, but it'll move the exact same way it would have eventually moved. It'll get to the same places it will have gotten to before. It'll just do it a lot quicker one way or the other. So I'm going to take that off and take that off there. Again, like I said, I'm going to go a bit slower today. Moving forwards, I'm going to be doing this a lot quicker once I know that you guys have got the cadence. But since I'm working with a lot of beginners here, for the experienced guys, please a bit more patience. So there are the highs and the lows. That's the weekly range. And I am going to, now I have a different color scheme for every time frame I'm on. On the weekly, my color scheme is saddle brown. So there it is, saddle brown. It's so that when I come down to a lower time frame, I know what I'm looking. When I see a level, because you see levels are very important. If you haven't seen me teach on that, levels in trading are the most important thing. And so I'm going to put this in a, so I know what kind of line I'm looking at, to put that in that one there. So this tells me it's a range line. Actually, I can only make it thicker if so I'm going to put the maximum thickness there. So that tells me it's a range line. In essence, this is a range I'm working in. So when I see this line on any other time frame I'm dealing with, I know, first of all, it's coming from the weekly level because it's saddle brown, and because it's this thick, it's a range. Very important. Because when price breaks out, when price comes close to a range or breaks out of a range, it behaves in a certain way. So what's happened on the weekly here? Let's zoom in. That's the range. That's the overall range. Now, in between the overall range, what is the current range of what we call the current price leg? So this here, this piece here, I'm going to draw my Fibonacci. This is the current price range here on a weekly. See that? That is the current price range on the weekly. We're in between here and here in this price leg on a weekly. Why is that important? Because I need to mark it out. I need to mark that out. Bear in mind, I'm doing this from scratch as though I started trading today. I am not looking at what I did last week, which would make my life a whole lot easier, but showing you from scratch how you do this every time you open your chart, even if you haven't traded for a week or a year or whatever. Come on, pick. I hate it when MetaTrader does this. It just makes it so hard sometimes to. There we go. That's what I'm trying to do. So that's a very important level there. In fact, okay, so I'm doing that because I wanted to show where it's coming from. So it's starting from there. Now, if I take a horizontal line and just drop it there, I'm going to change that because now this is it's not a range line, it's just a normal level line. If you go back in time, just as an example for those of you who are new, you see that this line here is respected several times in the past. Look, price is attracted to it there. It reacts there. It reacts here. It reacts here. Reacts here. Reacts here. Reacts here. This is how it works. That's why you draw levels, because levels repeat themselves in trading. Levels from years ago repeat themselves when you trade, right? So that's one level there. This is another one here. So that's the range we're working in. Now, let's go a bit deeper. In that range, and put this back in that range there, where are the previous points where price reacted to? The opens, the closes, the highs, and the low on a weekly level. And I'm going to draw them out real quick. For the sake of time, I'm just going to throw them as dotted lines because I don't have time to show you where they start from. So there's one there. That's where price closed that week. See, it respects that there. And you'll be surprised to see how, and this is just from the last few weeks. So go back, when you do this, go back anywhere between 4 and 12 weeks. 4 and 12 weeks. So we're going 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. That's why I put this here. So I'm going to go back pretty much to the start of that. So it's going to opens and the opens and closes. Just going to throw those on real quick. Now this is a weekly chart, so it's saddle brown. It may look congested. Please type if you can see where I'm getting these lines from. It's on the bodies of these candles, not the wicks, not the pointy ends, just the bodies. Guys, just let me know you're still tracking with me. It's gone a bit silent on the chat. I want to know I'm not losing you. So just chat. Don't take yourself off mute. Just chat. Right in the chat that you're tracking with me. Cool. Thank you, Priscilla. There we go. Which ones have we missed? Again, I'm only going back 12 weeks. In essence, I'm going back 1 month to 3 months. You will learn why as you get more experienced, because I will teach you. But for now, and some of them overlap, which is fine. If they overlap, just ignore them. So that's the bodies. Now let's find the wicks that we missed, because you found that some wicks and some bodies overlap. One wick will overlap with another body. So let's find the wicks that we missed. So that's a wick. That is another wick there. This is boring work, but it will save you plenty of money. Well, I don't want to do this. Well, you will make a mistake when you start, because you will miss out on certain things that you should have seen. And even when they're very close together, still do them, because let me drop this down to a 15-minute chart. You can see how bunched these are together on the 15-minute chart. See how far they are apart. Look how far they are apart. So what looks like they're almost right beside each other could be a significant difference when you get down to a lower chart. So anyway, go back here. So there we are. All right, that's our week. Cool. We're then going to go to the daily and see if there's anything we missed. What shows up on a daily that didn't show up on a week? See, some of them will just translate nicely from a daily to a weekly. Now, again, remember, we're going back a maximum of 3 months. So this is 1 month, 2nd month, 3rd month. So basically, we're stopping here. Actually, technically, we'll stop here because this month hasn't finished. So we're stopping there, right? We're not interested in anything beyond that point, because it repeats itself, as you can see. It repeats it. See, look, that was useful there. It is also useful here. So they have a way of repeating themselves. So just go, otherwise you just go back. You can go back here. So 3 months, what have we missed? And now we're going to put this in green, because green is my daily color. Now, with the dailies, I don't bother distinguishing between the wicks and the bodies. I just take unless it's far, unless there's a huge gap, like this one, for instance, here. But with the dailies, I just take the actual wick where the candle started and ended. So there. Now this one, I'm going to make a distinction because there's a significant gap there. And it's in green. Why? Because each level behaves a different way on the lower time frame. The higher the time frame, the more respect you must have for the level. Let me repeat. The higher the time frame, the more respect you should have for the level. A weekly level is gold. Price will treat it like a demigod. A 50-minute level, price can just ignore it. So you want to have and also relative to what level you're trading on, you want to know what level of respect to have for the level. What level of respect to have for level? That's funny. So these are quite far apart. I'm going to put them in. Now, remember, this is just a dollar index we're doing. It's a bit choppy. When we start looking at the actual currencies, it'll be a bit better, but we're just going to do it for now because it's needed. That is very close to that. So I'm going to ignore that one since I'm on a daily chart. I want to put that one instead. Cool. This looks like a hot mess, right? Watch the magic when you drop. Okay, so let's go to, so this is a 4-hour chart now, right? And you could argue that it still looks like a hot mess. Now, on a 4-hour chart, we would then be looking for significant highs and lows, not just any, now, significant highs and lows here on a 4-hour chart, right? Significant highs and lows. And that I haven't already captured here. So that's captured. That's captured. This one here is not fully captured. So I'm going to put that in, but it's going to be purple because that's my 4-hour level color, purple. Experienced traders, please give us 5 more minutes. We're going to get to the real stuff. I'm just catching up the rookies on how we lay out in looking for stuff. So there's no other significant, and also remember, we're looking for the 12 weeks. So let's zoom that in. So 1, 2, 3, 4 for the 12 weeks, significant highs and lows not captured. So that is close. Let me see. That's real close there. So I'm going to ignore that. 4, 5, 6, 7, 8, 9, 10. So I think we've captured. There's nothing on the 4-hour chart that we can't see clearly. Let's drop down to a 50-minute chart. I'm going to go back in time just to show you why we do this real quick. Look at what happens every single time price gets to one of those levels. Just and tell me if you can see a pattern. Every time price touches one of our dotted lines, can you see what happens? Please type in the chat if you can see, or what you can see is happening every time price is touching one of those dotted lines. I'm waiting for someone to type in the chat. What can you see is happening every time price gets to one of those lines? Someone says it begins bearing. Well, it also bulls sometimes, but you're right in the sense that, oh, I think I understood what you meant. Basically, these lines are price magnets. Price either stops for a while or reverses at them. Can you see that? These are what I call real pivots in Forex. The people who teach you to calculate pivots using mathematical formulas, I say that's rubbish, because price doesn't respect your formula dividing by this and dividing by that. Price respects one thing, itself and time, or two things, itself and time. Price is affected by previous price, because previous price tells you where certain people with deep pockets bought or sold, and it respects times of the day, times of the week, times of the month, and times of the year. C'est fini. Nothing else is relevant. No fancy. That's why you see there's no indicator on my chart that is not a horizontal line. The only indicator I use is a Fibonacci, and it has horizontal lines. That's why I use it. It tells me by drawing it from one point to another where certain levels will be horizontally. Simple. Now, if you could trade every day, knowing, okay, so this is a day, for instance, right? Let's look at a day where price really moved. The day where price really moved. Okay, so this day, right? Let's zoom in. This one here. So if you could have known on this day that the price would have touched this point, look at that. Look at the precision in that. See, look, isn't that gorgeous? And we didn't know, did we? We did not know that on the 26th of March, we just drew lines, right, from today. Look at that. C'est beautiful. Look, and look at what happens every time it gets to one of them. It stops, then goes again, then stops, then goes again, then stops, then comes back there. It's just so, these levels are like bus stops. I call them bus stops in my private parlance. If you want to take a journey, you go and wait for a bus at a bus stop or a train station, right? You don't try and jump on the bus while it's running on the road. That's why people make mistakes. Look at this. Look at this date. Look at this. Price went up. Boom. Went down. Boom. Up. Boom. So you want to be trading off these bus stops. Now, the reason I'm adding the 4 hour is because I'm trading the 50. That's the level I'm technically trading. So the 15 minutes gonna work on it. If I was if I was taking my entries on a 1 hour, meaning I was trading the daily, I wouldn't bother with the 4 hour, because I don't need this level of, look at this. It just be clumsy here. So I don't need that. I don't need the extra, whatever. But look at this on the 4 hour chart. So even if you trade a 4 hour chart, look at how price is respecting these levels. See, every time it gets to one of them, for the most part, it stops. There's a few that it just jumps straight through. But those are primarily fundamental moves, COVID, stock markets, things of that nature. And even if it skips one or two, it still goes to the next one. So like I said, if I was trading a 4 hour chart, I would ignore the greens. And if you notice, most of the ones it's ignoring are the greens, and I'll just stick with the weeklies, because again, the 4 hour is the reference from the weekly. The 15 minute, the 1 hour are reference from the days. So let's go back to today now. How am I going to trade as a day trader? Well, simple. Let me open another chart for this. So you got to keep these two charts side by side because you're going to be referring from one to another. Template. All right. So that's the same chart we just started with. I'm looking for a directional bias, meaning something to tell me what direction price is moving in. But before I do that, I just take a look at the chart and I see what do I spot from a price action. Now, some of you, this is not going to make sense to some of you. Should just watch me do this real quick. It's going to make sense to one or two people in the group. When I look at this, some things jump to my mind. I'm going to zoom out real quick. Now, I said this last year. I saw this last year. There's a gap. Well, actually, that wasn't EU. So, okay, cool. So we're looking at dollar chart. So looking at this real quick, there's a market structure break there. That took several years to form. Price is going down there. It broke this low high here. That's a market structure break. If you don't understand it, stick with me. You will in a few weeks. Just listen to the language. And then it moves up. Touches it once here, comes back to it here, and then it reacts. When it reacts there, it goes through a weekly engulfing. It takes out that week's high there. It came back in, tested it, and then rejected again. This tells me that on a long-term basis, price wants to go up. There's three things it's done to show me it wants to go up. Now, this is the dollar here. That's one. Actually, this one is here. This is the market structure break here. And this works in all charts. Price is a fractal. For those of you who don't the study, it means what works on the same principles work on all the different charts. What applies to a weekly will apply to a daily and an out and all the way down. So the same principles work. It just depends on what kind of trader you are. So that's one, market structure break. Two is the retest here. And the reaction. Three was the engulfing on a weekly basis. And four, that's four. Okay, so four will be the fact that it's respected there. Three is the engulfing on a weekly basis. So long term, forgetting what the fundamentals are doing, what the stock market and all is doing, the dollar wants to go up. It wants to go up. But there's several things happening that could stop it from going up. But in the long term, it wants to go up. And this is where the reaction came from. That's the liquidity profile there. It's another block. See, price comes in there, reacts, boom. So this is all I need from the weekly to understand that generically, my weekly bias is long. I don't need to spend too much time on the weekly if I'm a day trader. That's told me what I need to know. Now, this is where the magic happens. I drop to a daily chart. Now, I'm trying to frame a scenario, meaning what is price? What can I look at here and see the price technically wants to do? Well, on a daily, let me take a picture of that because I'm going to take off some things. And remember this market structure break, retest. Just that's all. What actually, I take that back. No, this is number two, the retest, but which is a manipulation retest. Number three is a deeper retest that takes that out. You're going to see this on a lower time frame in a second. That takes this out. We want whoever put their stop loss there to lose. So that is what we call a manipulation by the market maker. MetaTrader, you're not behaving yourself today. Right. That's 3. And then 4 is the first engulfing here. And then you could argue that 5 is the fact that it respects it. That's my signature pattern. I've just showed you this is how I make my money. Remember I told you there's several entry patterns you can use. This is my signature entry pattern. I want to see a market structure break, price to go back to that level, to reject with an engulfing, come back down, and take out that initial low as a manipulation, and then move away rapidly. That is my private, and I'm just giving it to you for free. I can't believe I did that. That's 13 years of pain for free. That's all I need to know. Price wants to go long, and I already have my levels, if it does that, plotted out here. So on my scenario now, my bias, I'm looking long on a daily chart. I may be wrong, but I'm looking long on a daily chart now. Now on a daily chart, I want to see pretty much the same thing happen, but now this is going to be strict. I will not trade in the direction intraday against a daily bias, and this is how I form my daily bias. I need to see an engulfing. This is the engulfing here, right? The daily candle, price drives through it one way or the other. See that there? The same, 1 second, let me delete that. Let me take a new picture of that. I want the same thing to repeat, but now on the daily chart. So come on, computer. Sorry guys, my computer is having, okay, there we go. Having intimacy issues. It's like you've been using me too much recently. Right, so we're going to repeat the exact same thing. Now that we know where we are on a week, in essence, by the time we come here, we already know where we are on a weekly level. That prices, this is a weekly move. And so I'm not necessarily going to wait for market structure break again on a daily, because I've already seen the weekly market structure break. And as long as the daily is in sync, I'm going to renumber these again. So where's my one? It's just frustrating what my computer is doing. Okay. There's my one. So on the daily chart, this is what I'm looking for. I want to see the daily engulfing. That's going to be green. Again, I apologize. This is going slow. It's a lot quicker when you do it on your own. It's just that I'm having to carry along people I know are new to this. So I'm having to be very deliberate. But if I did this myself, it'd take me 5 minutes. So that's one. Daily engulfing it's on daily now. Number 2 is, so price passes through here. I want to see it come back in there and reject. So it passes here. It comes back in and rejects. So that's number 2. I'm going to move the 3, 4, and 5 till I need them. Now, as you can see, this happened before the weekly one happened. So I don't need to wait for the weekly engulfing. When this was going on, I had my 1, 2, 3. The moment this came out of here, right? I didn't need to wait for that on the weekly. The moment this formed on the daily, at this point on the daily, I would be cleared. I'd be cleared to go long here 3 days in advance. 1, 2, 3. So from this point onwards, and this line here is blue for the sake of this, because I'm tracking bullish movement. From this point onwards of my chart, I am not interested in a sell. No matter how wonderful it looks, I don't care about selling until I see the exact opposite happen. I want to see a bullish, a bearish engulfing the other way. And that did not happen till here. It wasn't until this day here that I am interested in selling. Now, that's already passed, so we can't capitalize on that any longer. But let's repeat the same process now again, now that we know that. Bear in mind, on the weekly chart, it still looks bullish. Price is still holding above this weekly engulfing. So we're still looking for excuses to be bullish on the daily. So let's come back here. Let's get rid of these. Let's repeat the process again. There's our daily engulfing on this point now. This is where price crosses that downward daily candle. So at this point, we now start looking to go long again. Right? Price goes up, comes back in, and so we would have been bullish this few days. However, we've seen another opposite engulfing there. So price is narrowing. This tells me something big's about to happen. When price starts to narrow, remember the CMRET, for those of you who've done it, contraction, manipulation, expansion, retracement, target. When you start to see price contract, you know something big is about to happen. You want to be careful, but you also want to be ready and waiting. So this goes down again a few days, and then it's here. As of today, somebody type in the group, what is the last daily engulfing we've seen as of today? What direction was the last daily engulfing? Was it bullish or bearish? As of right now, today, on a Monday. Somebody answer me. So the answer is it's bearish, because the last daily engulfing, yes, was coming down. You're right, Jamie. And so technically right now, I have no business taking a trade on the dollar where I am not going down on the dollar. So if I'm going down on the dollar, if it's EU, I'm going up. If it's UJ, I'm going down, in essence that whichever alphabet comes first in the pair of the currency, if it's inversely correlated with the dollar, like EU is inversely correlated, if the dollar is going down, I expect EU to be going up. And what this is one, it gives me my premise of bias on the dollar. So when I come with the dollar to the 7 pairs that I trade, 1 second. Shut the door, please. Right, so I'm back. I stopped the recording there, but you guys could hear me. That's my son. So what we get from the dollar index is one, levels. When you see the dollar start to approach these levels, you expect it to do something on the other pairs. Also, you have a directional bias on the dollar. So you are not looking. So if the dollar is going down, I'm only looking up on EU. If I see something on EU that tells me EU should be going up too, I leave EU alone and find a pair. I find a major pair that is tracking in the same direction as the dollar, depending on which way it's rotated. So if it's an inverse pair like EU, if the dollar is going up, it should be going down. If it's a directly related pair like UJ, if the dollar is going up, it should be going up. If there is a crack in the correlation, if the two are not behaving the same way, I find a pair where they are behaving the same way. But I also know if all the pairs are behaving one way and one or two are misbehaving, it tells me that something is going on in that particular currency that I want to pay attention to. Because the moment it gets back in sync with the dollar, that currency is going to fly. Let me give an example. If the EU dollar is going up as of today, you can see it's starting to reverse today. But as of when we started today, the dollar was coming down. I expect EU to be going up. Let me show you what EU looks like on this now. EU, cool. So this is the daily on EU. So as you can see, as the dollar was going, let me put them side by side. One second, guys. Yeah, just telling everybody that, yeah. So that's EU there. Right? Let me find the dollar index. That's the dollar index. If you lay one on top of the other, you expect them to behave entirely opposite normally. So as you can see here, and I'm going to show you, this is a perfect example. When the dollar is at its highest point there, you will see, and this is how it should normally be, that EU is at its lowest point here. Type yes if you can see that. These are things I do to start my week every day, guys. If you want to be as good as you see me demonstrate. So type if you can see that. The high of one is the low of the other because they are inversely related. You see, it's EU. So if the dollar is going up, the value of the euro should be shorting against it. But if I take a pair where the dollar comes first in the name, like for instance, let me take UJ or USWISSY, UCHF. See that there? If I did the same thing there, I would expect to see the exact opposite in that when one is high, the other should be high because in this one, the dollar comes first. So they are directly correlated is the way we put it. So as you can see, when the dollar is at its highest, the Swissy is also at its highest. Can you see that? That's what we expect. So if the U comes first, you expect it to behave this. Let's see, look at this here. They're almost a mirror one of the other, aren't they? They're almost a mirror one of the other. The ranges are smaller, but it went up, it came down, it went up. So that's what you want to see. If you see a pair that is doing something different from the dollar, stay away from that pair for now, but write it down because it's a sign that something's happening. Now, why do I want to trade a pair in sync with the dollar? Because I can use the dollar as my directional bias. Now, if it's out of sync, even though the dollar is going up, if something's happening in the Swissy that is causing the Swissy to appreciate as well, they'll be fighting each other. So you want a pair in which the two currencies one is staying roughly the same and the other currency is moving wildly, or they're moving wildly in the opposite direction. Therefore, you see more of a difference for you to trade, more pips if you're right, also more pips to lose if you're wrong. But if they're both moving in the same direction at the same speed, they're not going to change value. Does that make sense? If the dollar is appreciating and the Swissy is appreciating, the value of one against the other is not going to change much. And so and that's why you see currencies that just move around for a while. In essence, nothing is going on. You don't want to trade that. But if you see one going the other way, you want to write it down and say, okay, something's going on here. Either the dollar is being manipulated, or this particular, well, actually, if the dollar is being manipulated, it would be against all the other currencies. So it tells you that particular currency is being manipulated. So come back to it, because when it gets back in sync with the dollar, it's going to fly. It's like a slingshot. You pull the slingshot back, you hold it on arrow. When you release it, it goes like a thief. And so my favorite pair is the EU. So if I see the EU out of sync, I'll move to my backup pair, which is the Swissy. Right now, I'm staying away from the pound because I'm emotionally attached. I'm a Brit, so I don't like seeing the pound go down. Brexit really wrecked the pound. So during Brexit, I stopped trading the pound because I wanted to make sound decisions, not emotional decisions about my country's currency. So I have the EU. I take 90% of my trades in the EU. My backup currencies are the Swissy and the Aussie, depending on what's going on. Right now, it's the Swissy. So I'll leave the EU. I'll try and get on the Swissy. But I'll bear in mind, something's going to happen in EU soon when it gets back in sync with the dollar, and I want to be in on that move. So this is what I use the dollar for. And as we are moving through the levels, every time I see the dollar come near a level, if I see it come near a similar level on the currency I'm trading, then there's a high probability that there's going to be a respect there. Now, I'm going to go and do very quickly. I've shown you what to do on the dollar. I'm going to do the exact same on EU. I'm not going to explain it because you know exactly what I'm doing now. I'm doing the same thing. I'm marking out the levels on a weekly and a daily. I'm marking out certain turning points. The exact same stuff I did just now. I'm just doing it on the actual pair I want to trade. And again, I'm going to start with a fresh chart. So I'm going to be quiet while I'm doing this. In fact, I'm going to play you some, because I'm nice like that. While I'm going to play you some music so you don't get bored. But it should only really take the best part of 5 minutes to do. Can you guys hear the music? It's a bit loud, isn't it? So while you are tuned into Israel Keys Radio, my second calling, just joking, I am going to go and do the exact same on the EU, and this actually should show you really how quick it can be if you don't have to talk someone through it. Let me say this real quick. The reason why I only work with the last range after setting out the major range is that on a weekly chart, you don't expect to burst through your range in the next day or two. And so, for instance, on the EU here, this is how many pips. Now, from where we are now, to the top of here is 590 pips. To the bottom is 250 pips. You really rarely see that in a day unless there's a really, really crazy thing going on in the markets, like a bust or a currency crashing or whatever. So I'm not really interested in the difference between here and here because I'm not likely to get there this week. All I'm really likely to do this week is move in between the last range from where I am in price in between the last range. So that's why if I was position trading or long-term swing trading, then I would have to incorporate some of these other ranges. So I just thought to explain that. Now back to DJ Israel Keys or Israel Keys Radio while I work through this real quick. Just going to duplicate the exact same thing I did on the US dollar. Even when I don't see it in your word, and even when I don't feel it in your word, you never stop. You never forgot to mention, this should actually be this line here. The last range should be a line, a full line as well, just not as thick as the other one. Actually, no, I did do that. Actually, sorry, I did do that. I just did it on. I just did it with a line with a star. Right, so I have my long-term range in case something crazy happens. I also have my working range for the week. I'm going to put in my levels real quick. So I'm working 12 weeks. 1, 2, so basically till the start of the year. We're still in, so 12 weeks. Right, let's do this real quick. A shortcut, I forgot to tell you, which is really cheap, but it works 99% of the time. There'll just be that one trade that it doesn't work for that make you think, man, I wish I did it the real way or the full way. But if you're doing daily and weekly back to back, you can actually skip out the wicks because the wicks on a weekly will usually show up on a daily. So you can technically skip out the wicks on a weekly. Now, it's a cheat. And I'm going to do that for the sake of time because it'll 99% of the time you won't suffer for it. There'll be that one day where one particular trade just decides to be mean. You know why I know? Because he is the covenant keeping. I think I've got everything I need to get on a weekly. Right, so I'm dropping down to daily now. And to make it easier, I work my way from like for example, if you notice, I'm going from the top of the screen to the bottom of the screen. It just helps make sure I don't miss anything out. And then I'll go back 3 months to do the same thing. Top, bottom, top, bottom, top, bottom. It just helps make sure you don't miss out anything because it can get very repetitive. The last few days are very important. Let me say this. The last few days are very important because price will respect them very, very clearly. For instance, sometimes when I say I'm closing the trade early, it's because I've hit the previous day's high, low, open, or close. So the last few days, you must be very, very clear and maybe even precise with them. Of course, sometimes they would already have shown up from a previous week's level or whatever. So for instance, notice I'm going 1 month, 2 months, 3 months, 4 months. By the time I usually do the first 2 months, you won't need to do the last few because the price will just keep repeating itself. For instance, this level here, right? Look, is a level there. So if I started here, I won't need it here. I'm starting here, you know, but if you look at it, if I just did it from the past, probably I should have done it that way. That's the way I usually do it. I do it from the past. I work my from the past because it shows you how. So let me delete that line there, for example. Slide here, let me delete that. Let's assume we didn't know that that was going to form. I'm just going to take a line from, see this here? See this here? Watch. Bam. You see that? That came from here. So it works either way, is the point I'm trying to make. So I think I have all the daily levels I need. Anything more would be overkill. There's one I've missed here. Anything more will be overkill at this point. Oh, no, don't go away. Why is this thing doing this? Okay, yeah, so cool. So we've got all the daily levels that I need. Drop down to 4-hour chart real quick. See if there's anything that we've missed out. Significant. Now we're looking significant highs and lows, just significant highs and lows. Right, so that's one there, that's one there. They all caught. Yeah, they all caught. Okay, this one, how many pips is that between this and the next one? 11 pips, but it's caught in the future. So yeah, so I would have, for anything more than 5-10 pips, I would draw out here, but I don't need to because eventually it's caught moving forward into the future at this point. So actually it's not. So I'm going to be pedantic and draw that out. But you see how it then respects itself here. It looks overkill on a 4-hour chart. When you drop down to a 15-minute chart, or if you're scalping a 5-minute chart, it can be the difference between a loss and a win if you don't know what you're doing. So that's it. Now let's put off the music. Israel Keys Radio is out of session. So that's it. We have our levels. Now we have so I'm going to lay these two charts one above the other real quick. So we have our EU levels, and I want also my one second. Got my EU level, and I also want my dollar levels, my US dollar levels, and I want them on the same chart. Cool. Now, I know that looks like a hot mess right now on the 4-hour chart, but can you see what's going on here? Look, this forms a high. That technically forms a high. It's a few hours late, maybe half a day late, but it's technically a high, right? Forms a low here, forms a low here. High, low. So it's behaving as I should expect, right? And I would actually have checked this anyway. I would have checked this before I start drawing the levels, because if it's not behaving as I expect, then there's no point even drawing the levels in the first place, because I'm not going to trade it. So I would do this first. But now that I've technically, let's assume I checked the correlation first. Now I expect them to be hit. So for instance, let's look at this here. Let's take the last significant whatever. Now, you see that level there? Here, you can take it away. On this particular time frame, the EU hit a level here. Please type if you can see that, please. It hit a level there. I expect to see a significant level hit roughly at the same time in EU. And that will be here. Now, they're 4 hours apart, but that's fine. And technically, they would be less than 4 hours apart. They just happen on different 4-hour candles, right? This 8 o'clock. Let's see, what time is this here? What time is this there? That's 9, actually. So yeah, you see, the reason why this is 9 a.m. and this is 8 a.m. So if I drop down to a lower time frame, let's go to an hour time frame. So that hit the level at either 9 or 10. Both 9 and 10 will work. On this one, it hit the level at 9 or 10. You can see, right? So please type to let me know you can see what I'm talking about, folks, please. I want to be sure I'm not losing you. I have two pairs, or I have a pair that's tracking with the dollar. It's in correlation. In this case, the EU, so it's inverse. I've drawn up my key levels, and the pair is hitting the same key level at the same time. Now, also, remember I told you that the time frame the level is coming from is significant. On the dollar, it's hitting a weekly level. On the dollar, it's hitting a weekly level here. On the EU, it's hitting a daily level, which is still respectable. So can you guys, before I even start looking at the technique, remember I told you guys in the beginner session last time that if you can't follow rules, no matter how good your technicals are, you will lose. I am not taking a trade, one, unless I see something in the dollar index that I like. Secondly, I find a pair that's correlating with it. Thirdly, they're hitting a significant level at the same time. These are already 3 rules before I even start looking for daily biases and things of those nature. At this point, I am happy. Now, it will be the same. It may not necessarily have hit it yet because now we're anticipating in the future, but I can see it's approaching the same level at the same time. At this point, I'm happy. I get rid of the dollar index. I'm not looking solely at the pair I want to trade. So the dollar index has done its job for me. Does that make sense? It's told me the bias. It wants to go up. Let me go back there. It wants to go up, but technically, as of today, it was in a downward system. So I bear in mind it wants to go up, but it's currently in a downward leg on the daily. I can't take a long trade today. Simple. Does that make sense? Today, right now, I'm not taking a trade in which the dollar's going up. Type if that makes sense to you. When I come to the market today on EU, I can only take a down EU trade if it meets the rules. Now, I know that long term it wants to go up, and it's coming into, let me show you now. This is where the technicals start to show up. It's coming into an order block here on the dollar. So I expect a reaction. And notice it's coming in on a Monday. That's very, very common. One of the reasons why I don't trade Mondays, because I let the market see what it wants to do. So I expect a reaction back in the original direction we should be going in, but I cannot take that reaction right now because it is out of sync. So today, if I was going to take a trade on EU today, I can only take a long on EU because the dollar is in a bearish swing, but I know that the dollar is getting ready to go long any day from now. So any shorts I take on any longs I take on EU can only be scalps. I can't stay in the trade for a long space of time. And since it's a Monday, I am not trading. Type if that makes sense. Now, I spent an hour just showing you why not to trade. This would have taken me 10 minutes. 5 minutes to set up my dollar chart, 5 minutes to set up my EU chart or choose which pair to trade. 10 minutes in, I know Monday is not there I should be trading. And Monday usually is not there I should be trading anyway. So now the dollar's done its job. Bye-bye dollar. Except for when if I now start seeing, for instance, today, you see what happened today? You see that level, right? See how price respected that level today. Now, in case somebody says, well, we drew that level from today on a daily chart, that's hindsight. Fine, let's delete it. Right? So, in essence, we've not drawn anything based on today. Let's go back to this day in time. See this day here? The 23rd of March, and throw that there. That is the 23rd of March. We're going to put that in whatever color you want to put that in. That's the 23rd of March right there. I'll put it in green because I know that's a daily level because it's coming from the high of the day. Green. It could even be a weekly level for all I know. But it's coming from the high of the day here. See that there? Just drawing that out as the high of the day. Look, it's suspected here again. See this? Suspected on this day, on the 8th of April, twice. It's suspected on the 9th of April. And then here we come. Even though price doesn't exactly touch it, let's look at the difference in pips. That's probably a spread. That's 3 pips. So we know before we came in today, that line there would have been on our chart. We expect something to happen there. Does that make sense? If it was a day we were trading, we would then put it up against the dollar and ask ourselves, 1 second, is there a significant level being hit in the dollar at this time? Is there? Now, this is coming down into that level on EU. So we expect it to be going up into the level on the dollar, right? Whereas the last significant level on the dollar that we would expect, well, we missed one out here. See this level from a previous day? That's the low of this day. So we missed it out. So I'm going to put that in there. That's the low of that day. So that's it there. I anticipate something could happen there. Price could turn. And I know the dollar is looking for an opportunity to turn anyway. So it was a day I was trading, but I'm not trading this day, so I'm going to ignore that. But anyway, that's all the dollar is for. So, oh boy, why did I delete that chart? That's a chart that we've just spent all the time marking out, and I've just deleted it. Oh, 1 second. Let me see if I can get it back. Can I get it back? Undo. Nope. It's not letting me get it back. Well, that's painful. We just thrown away. Anyway, we don't need it for the sake of today. It's just that I have to go do it again on my own now for my trading for the rest of the week. But for the sake of today, we don't need it because we've done our job for the day. We now start framing scenarios. Now I'm going to show you one of my system scenarios, one of my scenarios and one of my signals. There are different ways this could work for you. It's just how I would look at it based on my number one pattern. This is where it gets subjective. So remember, I'm trading the 4 hour. So I go to my 4 hour chart, right? Because this one is messy, I'm going to open a clean one for the sake of doing this. Go to my 4 hour chart. Oh, that one's messy as well. Right. Cool. So I'm going to my 4 hour chart. This is what I want to see. Again, there's several ways you could do this. This is what the technicals will show you. There's many different ways you can trade, many different concepts. All I've shown you to now is necessary for any concept. Your levels are necessary. Your directional bias is necessary. Your big picture reference points are necessary. Now, this is where it gets subjective. This is what I like to see. On a 4 hour chart, I would like to see a high or a low. Oh yeah, so basically, remember, on the daily, let's go back and let me remind myself of my bias. So on a dollar, right now we're in a downward swing, but I'm expecting it at some point this week to turn bullish. I just have to wait for it to happen. I'm not going to try and jump ahead of it. So the bias right now is bearish, but I expect it to be bullish soon. So if I flip it on the EU, I expect the bias to be bullish at the moment. And it is, if you look at this, I expect it to be bullish at the moment because the last engulfing was bullish. See that? That's the last time price engulfed. The last daily engulfing on EU was bullish there. Now, remember, I'm expecting the dollar to turn from bearish to bullish soon. So therefore, I'm expecting the EU to turn from bullish to bearish. And you can see it's well on its way. It's already engulfed the last day. It's engulfed Friday already. See that there? So if it closes there, then if it closes there and the dollar also closes with an engulfing, then it's a sign that it's flipped. But as of today, it hasn't closed yet. So I'm not taking a trade today. Now, coming back there, on a 4 hour chart, this is what I want to see to tell me it's working. I want to see a stop hunt rejection. Meaning price takes out a low or high and rejects the other way. See that there? That's a significant high there. Now, this took more than a week to form, so I'm a bit concerned about it. But usually I expect this to happen in a day or maximum 2. That's the high there. Price goes there. I expected it to drop. It didn't, so I'm a bit concerned. Now, another one would be this one here. That's a 4 hour high. Now, it touches it, but it doesn't take it out. So I'm worried. Let me see now. It comes very close, but it doesn't take it out. Make that line shorter so I can control it. Right, so you see, it hasn't cleared it yet. So on a 4 hour chart, I'm not cleared for takeoff on either side using this system. There are other systems I can use, but using this system, I'm not cleared for takeoff because that hasn't done what I wanted to do. you could argue that it did it here. It just took too long to do it. If that closes beneath there, right? If that closes beneath there, then that would be a, okay, fine, but I'm not comfortable with it. But bear in mind, I have a directional premise to work with. My directional premise is right now I'm going up, but I expect to come down, right? And there's a sign here that's about to come down. So if that happens today on my demo, because this worries me here, it took too long to do that. My demo here, I could be going for a short. I am not going to do that, and I'll tell you why. First of all, the market structure on the 4-hour is long. See, it broke up. It's still long. Secondly, on the daily, even though there is a little bit of a reversal going on here, it still looks like price is pushing upward generally. Delete that. And the Friday that it engulfed was a very tiny candle. It wasn't a significant candle. So, and also it's coming in here into this order block here, which I expect it to react from. And so there's a very good chance that this is a fake. Like I said, the 4-hour gives it away if it happens. It took too long to reject off this level, right? So right now I'm in stay-at-home mode. I'm not, and that's not a pun on the social distancing. I haven't seen anything that tells me particularly it's a good thing to go short. What I am going to look for is the potential that price could do one of a few things. It could, since I'm thinking I'm still maintaining the daily bias. I think this engulfing today of the Friday is just a fake. It could come off that level there. So this is option one. Now I'm going to give you, these are the scenarios now. It could come down there, take that out, right? And then reject upwards. What have I just done? It's not gonna let me. This is annoying. This came from, where did this come from now? I've forgotten where this came from. Let's go to the daily. It came from, I'm just gonna get rid of it. I don't need this on this chart. So this is scenario one that I'm looking for. Price to come there and then go long. Of course, if it's going to go long, I expect it to clear where it came from. So my levels of interest would be one here, and at least back to the same level that it came from, which is here, because it hasn't cleared this level. It's close, but hasn't cleared it. So I can see this happen. It comes back here. If it did, this will be exit one, exit two. Of course, you could have a week that has a bumper run. You could get all the way back up here. It could technically come up even higher, especially since we're in times where price is fluctuating because of the market issues fundamentally. So these would be, so this is a scenario, right? It doesn't have to happen. It's just a guess, but it prepares me to take advantage of it if it does happen. Another thing that sometimes happens a lot from experiences, price could form a low today here at this point here, right? Or wherever the day closes. And immature traders will say, well, that's it. No. It could then come, let's assume it forms a low here, right? It'll then, so it forms a low there. It'll then start going up tomorrow. Says, hey, it's turned, but this could happen. It would then come down and take out that low that it formed already, right? to get liquidity and then go. So that's the second thing that could happen. So I'm going to go into the week with those two scenarios on my mind, right? They could be wrong. Price could keep going down and not go up, in which case I will come back and reassess my scenario. But based on what I'm seeing from the higher time frame, this is roughly what I think is going to happen. I'll come back and reassess my scenario if I need to. But now I have a scenario, right? The scenario is for my daily bias, for my weekly levels and everything. So I'm going to come back now to that chart with the levels here. I'm going to plot the exact same thing there. So I'm going to work of two potential scenario levels. I want to see a stop hunt on a 4-hour chart at either that level there or a potential level that will form after today somewhere in this range, right? So somewhere around there. Notice how close each of them is to a magic level we've already drawn. Can you see that where we expect the action to happen is around these levels already? So price is either going to do this, come down here to that level, and then go up, right? And if it goes up where we're expecting it to go to, the levels we drew. So this, first of all, see here, this high here, that's a significant level there. So if price gets there, that's one. There's another one. See, it's already drawn out for us by previous magical levels. There's a third, meaning the swing high or the swing low. Based study swing high and swing lows. There's an entire mentorship video about that. Or the second thing we could expect it to do is going into tomorrow, fake out, maybe get to that level, and then come back down here, and then go. Now, how many of you have seen me on the group saying, I don't like what something is doing, it looks fishy to me, don't touch it? Type if you've seen me say that several times. By, this looks fishy, don't trust what's happening now. And then 9 times out of 10, I'm correct. This is why. Because my scenario already plans for the fishiness. At the start of the week on a Monday, I've gone through and there's several scenarios. I'm just showing you the two most likely. I could show you 4 or 5 different scenarios, but because you guys are new, most of you on the call are new today, I don't want to bore you with that. So you go in prepared already to be tricked. So if the trick happens, like, nope, I'm not falling for this. Now, sometimes it's not a trick. Sometimes you were just wrong and the price goes the other way. The good thing is, even if you missed the original trade because you were wrong, you haven't lost. You just missed out on a trade, which is fine. But now you come and you reassess every day based on what happened the day before. Over a 5-day period over the week, if you're reassessing every day, you will get one scenario right in advance between Tuesday and Friday. And 4 times out of 5, when the scenario plays out, you will win that trade. So this is what I will be looking for. One of these two things, right? Now, how do I know which of them it is? How do I know? Because the price could come here, but keep still going down, or it could come here, the original one, and still keep going down, right? So how do I know when it's time to enter the trade? That's what a signal is for, right? It's a signal, meaning my scenario has played out, the levels have been hit, I'm going in the right direction. What tells me enter now? There are several different ways you can do this. I'm going to show you 2 real quick, 2, so that you can look at your charts this week and see them happen in real time if our scenario is correct. And you can say, man, we bad with 3 bags of chips. So for my signals, remember, my reference time frame is a 4-hour time frame. So I've gotten my bias and my levels from the D1 and the W1. My signals have to come from the H1 and the 15 because my signal has to come from a lower time frame. Now this is how this is going to work now. So these are the scenarios still in place, right? The potential scenarios. So that's scenario 2. Let me just put both of them together. That's scenario 2. Scenario 1 would be it just comes straight down. Just comes straight down from here into that level. And then it goes. So that's scenario 1. That's not what I'm looking for. Oh, my computer is just mean. It's being mean to me today. So that's scenario 1. Scenario 2 is a little bit more shallow, is that this happens. Again, like I said, I can see 5 scenarios very easily here. These are the 2 that I think are the most likely. If another one plays out that's different from this 2, I will post it on the group as soon as I see it. So, assuming the price goes long this week, these are the scenarios that I expect it to play out as. Another reason why I didn't show you this, let me show you real quick, why I semi-assume price is going to go long as well, in spite of the faking out it's doing today, is if I draw Fibonacci from the high to the low of the current price swing. This is on a 15-minute chart. I could do it on a 1-hour chart. It'd be the exact same thing. It'd be from there to there. You see that we have reached the 61.8 level. Can you see that? I put on the 15-minute chart so it'll be clearer. We've reached, or we're just around the 61.8 level. Can you see that? Type if you can see it. If I draw my Fibonacci like I many times do, using the body of the candle and not the wick, either way is valid. It's even closer. So you see the perfect symmetry. There is the magic level we came into the day with, right? You see, look at what price did there on Thursday and on Wednesday. But we drew this level from like last week, from the 23rd of March, if you remember correctly. But see how prophetic it was over the last week, and see, so that level's there. We're expecting roughly, like I said, a manipulation there. That is the 61.8 level. Does that make sense? And so this tells me that scenario 2 is even more likely than 1 right now. Now, 1 could happen. It's very possible because on the bigger scale, if I drew my Fibonacci from there to here, same process, right? Now that is the 61.8 level. Can you see? That then becomes the 61.8 level. Depends on whether I take the intermediate swing or the full swing of the page so far. I could take whichever way you look at it. Fibonacci is not magic. You just gives you an idea. Whichever ones you pick to swing from a swing, where I teach you that later. But it's just telling me that those 2 levels are potential levels. So I need a signal. This is going to be my signal. On a 15-minute chart, first of all, and this is where the rules come. This is where you have to stick with your rules, because you miss out on some trades that you could have gotten on. Stick with them, because you'll also lose some trades you shouldn't have lost if you don't. When tomorrow happens, I want to see where the Asian range forms. Since I'm going long, if I'm going to trade in New York, or in London, that's 6 a.m. to 10 a.m. tomorrow morning, I want the price to form a range. Let me give you an example. Let's assume this is the Asian range. Let's assume that this is where the Asian range forms. Somewhere there. I'm going to change the color so you don't mistake it for one of the other lines. when I say Asian range, it just simply means the range that price stays in during the Asian session, which all you need to know for now is it happens while you're asleep. The times and everything, we'll look at them soon, the exact times, but just know it happens while you're asleep. So if you wake up in the morning tomorrow, and it should be a range, in essence, you want to see price bounce in that range. You don't want to see it moving clearly in one direction. If Asia moves clearly in one direction, this model will not work. You have to use another model. But 7 times out of 10, Asia is a range on a 15-minute or 1 hour chart. So in essence, this period here, you see these lines here? Every day my chart draws them for me directly, but we're not there yet. So if that's the case, I will only take this trade if price forms beneath that level there. It has to form beneath that level, right? And then coming back up, I want to see a 1 hour engulfing. So the last candle that forms beneath that level, I want to see a 1 hour engulfing in the other direction. This would be an example of a 1 hour engulfing. Let me show you what I'm talking about. So on a 1 hour chart, the same thing I showed you for daily and weekly on a 1 hour chart, this is an engulfing here. See this there? That's an engulfing. Price was going down. It came back up and ran through it. That's an engulfing. Alternatively, you can see what I call a rejection engulfing. This here is a rejection engulfing. Because while price has not engulfed this candle, it has more than half of the candle retraced from where it stopped. So in essence, the reversal didn't happen in the next candle. It happened in the same 1 hour. But if you draw out this candle here from top to bottom, the engulfing happened above 50%. The retracement, it retraced above 50%, meaning more than half of the candle in the direction it was going was reversed in the same candle. Type yes if you got that, whether or not you understood why. Type yes if you got the reason for that. So I want to see one of those two things happen tomorrow. In either, where am I coming from? What chart was I on? Okay, this one. No, the one with my levels. There. So I want to see that happen, right? It goes beneath that to tell me, because we expect that every day. For those of you who have taught this already, I don't have time to teach you why. But on a day we're going long, we want to see price dip below the Asian session in London. And on a day we're going short, we want to see price dip or jump above the Asian session. I'll teach you that as we go along the course. Just understand that for today. Now, we could be coming down and say, oh yeah, we've done that, great. And you see a 15-minute or 5-minute engulfing, but then it still keeps coming down, in which case we're coming down to this level. So you lose. The signal is that it's a 1 hour engulfing. 1 hour engulfings inside a day are very powerful. They tell you pretty much price is retracing. If that doesn't happen, because price could just do this, it could form the Asian session, and then it could go from this line here in the Asian session. That's fine. Meaning in London, it doesn't go down there. It just forms a 1 hour engulfing in there. That would be a riskier trade, but it's possible. What I would then do is, to be on the safe side, is I wouldn't trade in London. So this is, for instance, this is London here. Let me give you an example of today. What happened today? London starts at 6 my time. So that's 8 server time. My server is 2 hours ahead of London. So that's the start of the London open period. And then I'm going to go till 10, which is 12 o'clock server time. So if I was trading today, I would only take a trade in that space of time. I'm not entering before that blue line. I'm not entering after that blue line. I showed you this in the last webinar. It has to be, it's on YouTube. It has to be within that space of time. It adds an extra filter. See what happened here. On a day where we came down, see price went above Asia, right? See that? So if we were looking for today to go down, it forms in that space of time above the Asian range. And I would wait for 1 hour engulfing, which would be here. And what do you know? The engulfing happens, look at a magic line. Can you see that? At a magic weekly line. You see why these lines are so important? This would give me 4 or 5 levels of confirmation if I had been trading Monday. And so once this candle closed, I would enter here, put my stop loss there, 20 pips. And right now I would be 54 pips up, which is almost 3-1 on a Monday. That is good. You could refine it on a 15-minute chart. So on the hour chart, you say this is the level that you're looking for. It's crossed half the body there. Actually, no, I take that back. No. This would be the engulfing here. I made a mistake. Sorry, this would be the engulfing here. This would be the level at which it engulfs there. I'm going to make this a blue is usually my 1 hour chart color, but I'm already using blue to demarcate, but that's fine. So that would be the engulfing there when it takes out that candle, right? Now, I'm going to get rid of this because it's just showing us. Let me put that there so we see London. The London trading block is there. So I'm going to get rid of this too. So you see, it comes at the end of that period there. Now, do you have to take your stop loss all the way back there? No. Now that we've had a 1 hour, just wait for this to happen. Look, see, that's the level there. So like I said, because it took so long to happen, in essence, I wouldn't have taken a trade here in London. I would have waited for New York. This is because London didn't give me what I was looking for early. It didn't give me the engulfing I needed early enough on the 1 hour chart. You could have taken a 1 hour, a 15-minute engulfing riskily here. See that there? You could have done that. And your stop loss would have been, again, 20 pips. So you could have done that, but that's risky. The safer way is to wait for 1 hour engulfing. And even if London doesn't give it to you, New York probably will. And New York is from 12. Remember, we trade in New York from 12 to 3. So server time, that's 2 p.m. server time. There to 5 p.m. server time. So we're watching for an opportunity. And now we have the privilege of London having formed. And we see that we've already gotten our signal in London, which was the 1 hour engulfing in the direction we would have been looking for. Well, price comes back. See, it comes back for us. You don't chase it. Does that make sense? You don't chase it. It'll come back. And if it doesn't, leave it alone. You wait at a bus stop. If the bus comes, great. If it doesn't come, you go home. But you don't try and run and jump on a bus while it's on the street. You'll fall and break a bone. Also, this year as an experienced trader, when I see this happen, I know it's coming back to here. Again, you don't know why yet, you learn. But as an experienced trader, when I see that happen, I don't sweat. I know price is coming back to at least that point. It has to trade properly, efficiently. That boom, I know it's coming back to at least that point. And so when I frame all that together, again, I have another magic level here. Can you see? I have another magic level here. I have the fact that I've already seen the engulfing happen in London, and then it retraced. I've come into New York and it's given me this. Here in New York, I can now trust in New York. I can now trust my 15-minute engulfing. In fact, I don't even need to wait for the engulfing to trust it, right? I can take it here. I can take the price here. Once it comes to that line there, right, and starts to come back down, my entry will be here. my stop loss would be there. And you can see this is a lot cleaner now because it's 12 pips. So it's even better. And so with less pips on offer, I can make 12. I can still make the exact same risk to reward ratio in a smaller range because I'm keen off my levels. But the best way to do it would be this. And I'm going to show you this now with my tool. This would have been the best way to do it. Right, 1 second. Why is this not forming? Oh yeah, because I'm on a pair that I would, no, I can't trade this pair on this account. That's fine. So let me find a pair I can trade on this account. This is my demo. So I'm looking for, I believe I'm looking for, where is this? The ease. My browser is acting funny. 1 second. Okay, so this is an Admiral demo account. So yeah, it should be. Oh yeah. That's it. Aha. So there's my tool, right? For entering and exiting. I know it's a bit colorful. I would just wait here, right, for the 15-minute engulfing, which is there, and enter there. Because I would know with confidence that this is, or I'd actually put my line above there. Because I would know that this would be the high of the New York session. If I wanted to be very safe, I'd put it back up here. But I don't need to do that. I just need it here, just above that there. Or at best above there. And so 1, 2, and then I would take my trade. Does that make sense? So I'm expecting something similar tomorrow, but in the opposite direction, right? Tomorrow, let me put that back, Euro USD. Euro USD. Anyway, tomorrow, I'm expecting the opposite to happen. Price to come beneath this line here somewhere. Give me a 1-hour rejection. And then play out this way to give me an entry either in London or in New York. And at that point, let me use a 30-minute chart. At that point, let's assume it happens here at this level here. So assume that's where my entry is. I'll be looking to get out at the top of yesterday, which is today. So at the top of Monday, in Tuesday, at the top of Monday, because it's gonna respect that level first, and then moving forward, it will start respecting these other ones. And so every day I would then do the same thing, plot my Asia, wait for price to go beneath it, get an entry, go long, come out at a higher day's level. Does that make sense? Until I see a D1 reversal. There will be one day where price will reverse overall. I may lose that day, or I may break even or take a smaller loss. I'll teach you how to manage your trades moving forwards. But this is how I would be prepared to take a trade. So if this happens tomorrow and you see me put on the group, buy EU, somewhere around 108.7, 108.8, that kind of thing, you guys are going to say we were part of the analysis. We knew exactly what was going to happen before it did, and we were on the ball. Does that make sense? I think I need to close here now. We've done exactly 2 hours. If you count the 10 minutes we spent chilling at the beginning. Even if you don't understand the technical concepts, does the general process behind it make sense? Please type, everybody. Now, the technical concepts, once you learn them, are not that deep. This is the hard part we've done. People don't believe me when I say that. The hard part is following rules. The technical knowledge is like saying, if you, whatever you went to school to do, you know, engineering, science, whatever it is, your brain will remember half of it. And this is even better because this is pictures. One of the reasons why trading technical stuff is so easy is you're looking at pictures. Your brain was designed to work with pictures. You're not just cramming stuff. You see the pattern. It'll call out to you. But if you don't go through this process and put the rules in place, the levels, the bias, the signal, the expectations, where you want to get on, get off. From last week, we talked about your risk to reward ratio, minimum 3-to-1. You should be looking for 4-to-1 mainly. Meaning, for instance, when I get into this trade tomorrow and I'm expecting it to go and get off at no further than yesterday's, than Monday's high, is the risk to reward ratio from where I enter with where my stop loss should be to that point, is that up to 4-to-1 or 3-to-1? If it's not, if it's only 2-to-1, I don't take the trade. Why? Because I could lose it. Yeah, but you're still going to only lose one. But yes, over the course of 10 trades, if I'm going to lose 3 and win 7, I want the 7 I win to all be 4 or 3-to-1 or more. I don't want one of those 7 to be a 2-to-1 or 1-to-1, because over time it doesn't balance up my averages. So the stuff I showed you last week with the psychology, with the foundations, and now with some of this kinds of analysis things, starting to form a framework, now you are positioned to become a great trader. Like I said again, my mom's been trading as long as many of you have been on the group. She's trading live now. She's making money. One of the things that she's good at is that my mom has always been good at following rules, unlike me. My mom is very intelligent, but she's always been good at following rules, unlike me. I've usually been the risk taker. I'm the guy who breaks all the rules. And trading beat that stuff out of me, because you break rules in trading, the rules will break you. I don't care how good you are technically. Over time, if you don't follow rules, they will break you. All right, guys. So this is an example. Maybe I should rename this from a live analysis session to a beginner's mentorship live analysis session, because I did in 2 hours what I would have done in 20 minutes if I'd been on my own. But I had to lay it out with you. As we start to move forward, you just see me start to move lines and move things, and I won't explain myself unless someone asks me a question, but you'll understand where we're coming from. Does that make sense? Type in the chat box if it makes sense. While we're doing that,